And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome back. It is time for the Market Prep Monday, February the 27th. My name is John. Thanks for trusting me with your time. It's great to be back with you all. We had a wonderful and I believe a very successful company retreat. Lots of good things coming your way, and we'll just have to see how these things play out, right? It's kind of just like the markets. As always, our focus this morning is on finding accurate context, good risk management, and remaining patient in our trading. I have missed you all. Again, it's wonderful to be back in the seat, back into the markets, and we're going to take a good look and see what we've got going on here this morning. It's Monday. I'm going to remind myself that I usually am a relatively slow starter in the week. I'm going to be patient today and look for opportunities as the day goes on, and of course, always seeking those asymmetric opportunities where I can risk a little to make a lot. As far as economic numbers this morning, 7:30, the durable goods orders came out. Equities are still moving to the upside here this morning after those numbers. Let's see what they looked like here. Let me see, make sure I got the right day. Durable goods orders higher than expected month over month in January. That's the core durable goods. Overall durable goods lower than expected. So we'll see how the markets digest that information as the day goes on. We're still waiting for the pending home sales. That's at 9 o'clock this morning. But as for the week, it's a relatively light week in economic numbers. There'll be some focus on some retail earnings due out. We'll review those here very shortly. Tomorrow, international trade, Case-Shiller home pricing, FHFA house price index, Chicago PMI, consumer confidence all tomorrow. Wednesday, PMI manufacturing final, ISM manufacturing index, construction spending, and of course the EIA petroleum status report on Wednesday. Thursday, jobless claims as usual, productivity and costs and nat gas. And then Friday, we've got the ISM services index. None of them expected to be very impactful. I don't see a lot of talking feds on this calendar. Doesn't mean that they can't pop up once in a while unexpected. I do see Bostic and Barkin due to speak on Friday. So U.S. stock futures set to open higher as reading and watching the news and everything this week. A lot of talking heads, in other words, the media warning for lower pricing after Friday's strong PCE numbers. Last week's performance was the worst week in equities for the year. So far, talking feds continue to discuss higher rates for longer. And of course, traders and investors watching the economic information due out, each one of them thinking, what does that mean for rates, and what are the talking feds? What's the FOMC meeting going to create for us? Are we going to see higher rates for longer? Are we going to go into a recession? Who knows? We're trading what we see here. So with the thin economic numbers this week, it's again putting more focus on some of our earnings and a lot of retail earnings this week. Tuesday before the open, Target and AutoZone. After the close, Ross Stores. Wednesday before the open, Lowe's and Dollar Tree. Thursday, Kroger, Best Buy, Macy's. After the close on Thursday, Costco and Nordstrom. So again, a big focus on retail earnings this week. We've got the VIX a little bit lower this morning, 21.54. The dollar index also slightly lower at 105.11. Of course, these are last I checked. The yield on the 10-year back down below 4 at 3.93%. As always, I ask that you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome. Make sure you subscribe to our YouTube channel so you get notified when we do go live today. We are going to be having group coaching at 12:30 this afternoon, I should say. No make home money because we have the special session with Jared Tendler at 2:30 Central today. Looking forward to seeing all of you there. Let me bring those links into the chat. Hope you guys had a nice weekend. Hope you traded well last week in my absence and in our absence. Of course, our goal here truly is to see your success. Let me get the link here for group coaching today. I've got a whole bunch of emailed in questions already. Should be a very good session. And here is the link also today for the session with Jared Tendler. Again, that's at 2:30 Central. Here is the link to register for that. So the first link, group coaching with me, and then the second link, group coaching with Jared Tendler. We always look forward to having Jared with us. Very good book, very good performance coach. And again, we look forward to seeing Jared this afternoon. All right. We're not going to do too much yammering here. We're going to get into the charts pretty quickly, but I always want to say good morning to everybody. Shaw first in the room winning the prize. Janusz, good morning. Mikhail, Jules, it's good to be back. Rooster crowing early this morning. It's good to be back again. Brian, John, we did enjoy the trip. I know I enjoyed the trip. A couple of funny stories. Maybe we'll get into those later on in the week or later on in the session here this morning. John, Jason, Bill, JD Royalty, it's good to be back. Alejandro, Robert, good to be back. And of course, Sarah, thank you very much. Prayers and love to you as well, German, Jason, Lewis. Rusty Golfer, my spirit animal. I did not play golf while we were out there. It was pretty chilly in Las Vegas, maybe around in the 50s during the day. And we all know how the desert acts at night. It gets pretty chilly. Haggle Matters, good morning. Are we going to break this area of support, ZK? I don't know. We'll take a look shortly. Will, good morning. Philip, Mia, Anissa, my brother Rick, good to see you. Love you. ZK, Timothy, Leslie, JT, Orion, JD, good to see everybody. Steven, missed you in your session the last few trading days. I missed you too, Steven. I enjoy the markets. I enjoy the time I have with all of you, and I look forward to seeing you for group coaching today if you're so inclined. Scott saw and he conquered. Terry King, Travis, good morning. Nas Tick, Trading Research, Shy, Marcelo, R, good to see you as well. Dan Trader, good morning. Definitely missed you as well. Will, my app crashed on Friday. Anyone else? Party time. Looked everywhere. Didn't know you were off. Sorry about that, Orion. We try to let everybody know in good time, but sometimes we don't succeed at that. But again, it's great to be back with everybody this morning. All right, let's jump into the S&Ps. Lots to discuss in the S&Ps. I think it's going to be they're always interesting markets, always interesting opportunities for us. Let's jump in. Here's the daily in the S&Ps. So we had a really bad week last week. This is our low for February. One thing I want to point out, okay, we had some numbers come out. We have lots of concerns. We have plenty of geopolitical uncertainties. It's the potential for recession, some positive economic numbers that are viewed as bad news at this time. What's it look like in the longer time frame? Check out this monthly chart. This is just a different platform here. So I'm going to make this big so we can all see this. With all the uncertainties, with all the positive numbers coming out, with the specter of recession, with the geopolitical situations, this is the October low. This is the low from November, December, January, and February. 5 days, 4 months in a row, we've put in a higher low. Highs, relatively kind of weak up here, okay? We look at the candle body highs here, very even. Candle body highs here, very even. Whereas we have excess at the low, we've got more excess on the lows of these candle bodies on the monthly chart than we do on top. It looks to me with March coming in on Wednesday, March already. I know it's kind of hard to believe, but we've got a higher low. I'm going to be focusing very much, at least for the beginning of March, on this February low. If we can't take out this February low, it's going to keep our upside structure in the longer time frame, in the investment time frame, in the bigger time frame, the bigger trader time frame, to the upside. So with all the bad news coming out, there's a little bit of good news in that. Well, what are we looking at today? We got last week's low, February low, on Friday. What was the volume like? Well, in New York, the volume was actually relatively feeble. It was 3.8 billion contracts to put in a low for the month. That, I think, is relatively feeble. Did we add a whole bunch of open interest to the downside on Friday? No. We added 200 estimated. 200, that is just absolutely inert. The auction to the downside last week did not perform well. So where are we? Well, we've got the market kind of heading back higher this morning. There are a couple other things that I want to point out to you here in the equities. All right. Well, now we're starting to show some overnight long inventory. Gap rules, the 730 numbers have the market continuing to push higher, leaving Friday's range alone. It's not an island bottom, but with the excess that you see on the bottom of the daily chart, there is an indication that the downside auction that we endured last week may have come to an end. Now look at where we are. We're opening with the gap, overnight inventory long. If we can't close the gap, we know that rule is we trade in the direction of the gap, which would have us looking for longs. We've got some visuals up above. We've got Thursday's point of control. We've got Monday's point of control. Monday was a holiday, but still that point of control remains unchecked. Last week's low, the February low, again, is extremely important, I think, in the coming days and in the next couple of weeks, the beginning of March. So very low volume, no open interest change, putting in the low for the month, and then leaving excess on the daily chart. There's nothing that says this market can't go lower. A lot of opinions, the talking heads, in other words, the media, are all singing doom and gloom. The monthly chart is saying something else. So if I'm going to trade what I see, this last week's low, the February low, is going to be very important, an important level for me. Take a look at the TPO charts as well. These are the daily, not the overnight. Well, look what we did on Friday. We had a normal variation day, Very centrally located point of control. It's a neutral normal variation day. The IB, neither the high nor the low, keeping this market rotational with a very prominent point of control, a very wide, stout profile. The market used up a lot of its ability to facilitate trade down here on Friday and seems to be now looking for different levels to facilitate trade. On the profiles here, we have 1 week high, 2 week highs, and 3 week highs, indicating if we can't continue this market lower and bring new business to the downside, a lot of this push down last week was shorter time frame, weaker hands traders. As price continues to squeeze them, the opposite of what everybody is saying is going to happen, at least the talking heads in the media and all the naysayers out there. We may see a pretty decent upside move. I know it's shocking. Nobody knows exactly what's going to happen, but from what we're seeing on that monthly chart, the week highs, the market's ability to facilitate trade here all day on Friday, now seeking another level. Last week's low, the February low, remains extremely important if we get there. So again, looking back at the 30-minute chart, we've got our low here. Are we going to now begin to squeeze a lot of these shorter hands, shorter time frames, weaker hands traders to squeeze this market to the upside? Equities have always been extremely resilient. Are they going to be resilient this week? In the near term here, we've got a gap to the upside. If we can't close this gap, even if we do close this gap and don't find acceptance in Friday's range, the opportunities, I think, are going to be to the long side. All right. Take a look at crude oil now. I still got my profiles on here. Still range bound in the longer time frame. Long time frame basically remains in range. Very little changes to the weekly kickoff high and weekly kickoff low. We've shortened up the upside a little bit, but the downside weekly kickoff low is 73.90. It was 74.10 last week. We're centrally located in last week's range. We're centrally located in weekly kickoff high and low. This market is in short time frame control. Open interest fell on Friday by approximately 14,000 contracts. Volume remains relatively stable, but in looking at this, we are very range bound. Short time frame control. Let's take a look at some short time frame levels, shall we? So here's the last week's low. Big push to the downside, back to the upside, range bound. Where is this market going to? Well, let's see. Friday's low relatively close to the Wednesday's low. Friday's high, a naked point of control from earlier in the week. What are we looking at? Well, we got another naked point of control up here. We've got no real naked points of control till we really test the low of the range from yesterday. And again, because we're in the middle of the range, I'm going to stay patient. Not only that, overnight inventory is relatively flat, maybe a little bit to the short side, but we're in range. We're in value. We've opened an area that may bode for some degree of repair from the profile from Friday. What else do I have here? Yeah, I mean, inside the value area from Friday, I'm going to try and stay very, very patient. Here's the TPO chart. Here's the kind of area of potential repair would be from this point of control here down to an assumed point of control down here, right? Probably right around value low from Friday. A little bit of excess on this low. The initial balance is the low of the regular trading hour session, the extreme low of the initial balance. P-shaped profile indicating short covering supported by a loss in open interest of approximately 14,000 contracts, not necessarily a week high, excess on the low after a week low on Wednesday. Opening again in range and value suggests better trade locations are going to come as the day goes on. All right? All right. NASDAQ. NASDAQ did not perform as well. Actually, as percentage-wise, it was a bigger percentage loss, but it didn't take out any important inflection levels. So the weekly kickoff high and low basically remain exactly the same as last week because we didn't really get a true test of them. We have our February low, the low from Friday again. I think that's going to be very important. An important level. Market kind of looking higher away from that level now. Second, what about the open interest on Friday? 0. Almost 0 change in open interest on Friday on an attempted continuation downside move. That's not very healthy for a downside auction, ladies and gentlemen. So this market held up pretty well last week. Volume was just okay on Friday. It's a little bit lower than it was on Thursday. Down days usually tend to bring volume. It didn't on Friday. And an inert 0 change in open interest on that downside move. Are we going to leave this tail here as excess? Here's the 30-minute chart. Settlement. 11,997. Gap rules. We can't close the gap relatively early. We look for opportunities to push this market higher. Let's extend this. Last Monday's naked point of control, another naked point of control above. Potential repair from Thursday's session. Again, I'm going to try and be patient, but at the same time, opening out of range and value from the previous day suggests better trade locations may occur early in the session. Being Monday, I'm going to remain very patient. Take a look at the gold now. So, good structure to the downside. I mean, this market, since we broke this trend line, has really done a nice job. Here's a bear flag. We got the bear flag that has continued to push price lower. Where was the bear flag target? Right about here. Well, where did we get to? Right about there. So are we putting in a low here? This area, this whole area of previous balance should be relatively sticky for us. We had a pretty decent move to the downside, but the volume on Friday was lower. We added 1,100 estimated open interest, so there's still money coming into the short side. My question is that shorter, weaker hands late to the party shorts? Last week's low is, again, probably going to be pivotal. Here's the 30-minute chart. There's last week's low. Looked below it, rejected it in the overnight. Do we have any overnight inventory? No, not really. Are we still in range? Yes. Are we above value? Yes. Stay patient in gold, ladies and gentlemen, here today. Last week's low is a very interesting level for us. If the market brings us down there, it could bring a decent opportunity for us. It's going to be somewhat pivotal for us today. Take a look at the TPO chart. IB high, normal variation, neutral day. Used a lot of facilitation here. Excess low, excess high. Lots of kind of visuals up above. And again, similar to the S&Ps, we've got several week highs above price. Unfinished upside auction. Monday, unfinished upside auction. So we may be looking at a situation currently where we've got some shorter, weaker hands traders short in the hole here. Again, I'm going to try and stay patient. We did open and range and value, not too far off from that. Be patient. Opportunities are going to come. Anything else I got here? POC prominent on Friday. This may come into play. Well, it's already been checked today, so it's already been in play. Take a look at the euro now. The euro. So we've got the dollar off its lows for the month. Okay, the low I think was on the 1st of February, and the dollar has been kind of trending higher ever since. Well, it makes sense. Here's the 1st of February. Dollar's been trending higher. The euro has been trending lower. This is going to be another sticky spot here. This swing low here is an area that was very interesting to me, but I'm looking for maybe a little bit more continuation to the downside before we can start to really shore this thing up. So volume was pretty good. Open interest increased by about 1,500 contracts. The auction was better in the euro than it was in gold, but now look at where our overnight low is, very close to that, and a test below and rejection below of last week's low. Take a look at the 30. Nice, Zach. Glad it's working. A little Doors reference there, huh, Ponzi? Out here, we is stoned. Immaculate. All right. So we gapped. I think we did close the gap on Friday from Thursday. Another prominent point of control, B-shaped profile that added open interest. Overnight inventory now looking long back into Thursday's range. Lots of visuals above here, ladies and gentlemen, for the market to go back and retest. I love the look at last week's low here. Unfortunately, overnight, if we get a chance to look at it again, it might be something very interesting. We did open in range and value, suggesting patience and better trade locations as the day goes on. If we fall into short time frame control, value low, value high, point of control, value high, these will all be targeted levels for opportunities to limit risk. Problem is there's too many of them. Take a look at the TPO chart. Very prominent point of control down here. It's been checked already. We looked at it this morning. Support. Again, some visuals not too far above. We've had a pretty decent downside move. Is the downside losing its ability to facilitate trade? We used a lot of that on Friday. Looking to see maybe this market can continue and go and recheck the visuals that are just above. 10-year. So last week's low again is going to be somewhat pivotal. This is the June contract. We rolled on Thursday or Friday, I think, to the June contract. So we've adjusted all our levels. Last week's low, pivotal. Weekly kickoff low, also in that area, also pivotal. Look at the downside move. Pretty good job continuing this downside move. Unfortunately, now during rollover, volume and open interest are now going to be blurry for about a week. We've got minus 31,000 in open interest on Friday. Again, that's probably more of a function of rollover than anything that we can use directionally. Here's the 30-minute chart. So we opened in range and value, rejecting that, perhaps looking to take a look at this point of control up here, this volume point of control. What do we do in the TPO chart here? Weak low on Friday, weak high on Thursday. This market is so prone to leaving weak highs and lows, it's hard to know which ones are important. We still got a gap from Monday to Tuesday, opening, Testing the point of control. We still haven't tested the TPO point of control in the 10-year, which is down here. Okay, 110.26, 110.27 area. Haven't checked that yet. But we did check we didn't check the volume point of control either. So we missed down there. That could be useful information. We've got excess on the low here. But 1, 2, 3, 4. Day 5 in balance here on a downside move. Take a quick look here at the natural gas. A little bit of a reversal pattern here, ladies and gentlemen. We've got a bullish piercing pattern here. What is this? The 21st to the 22nd. Downside, the following bar looks lower and then closes more than halfway through the candle body of the previous day. This is a reversal pattern we see. We're seeing the market continue to try and push higher. Last week's high was Friday's high. We're already above it. We lost 1,800 in open interest on Friday. Maybe a finishing up of some rollover activity there, but it would indicate that we had some shorter time frame, weaker hands shorts in the hole down here. We're seeing the market continue now to the upside. Here's the 30. Overnight inventory on the open was pretty much nil, maybe a little bit long, tested to this point of control. Gap rules, ladies and gentlemen. If we can't close this gap relatively early, it leaves us out here trying to find pullbacks with which to see continuation of this move. This is going to be a difficult trading day in the natural gas if they aren't already, because the market's already directional. If we believe the market is going to continue this directional move to the upside, don't buy highs. Look for pullbacks to limit risk. It's going to be a hard day to limit risk. Take a look at the TPO chart. So here's Friday's excess, low excess high. Today, gap. Can't close the gap. We look for opportunities to trade in the direction of the gap, but again, it's going to be a hard thing to find. One of the things about trading that I've noticed over my years of trading, to get into a directional move that is already underway, much the way that the natural gas is already underway, one of the hardest things for me to do. Well, I think it's kind of psychological, for one, because we have to pay higher. You got to pay higher for a higher price so that maybe you can take advantage of continuation of price continuing to the upside. It's a hard thing to do. Always been very challenging for me. All right. Okay. Again, no Make Hogue Money today. We're going to have group coaching at 12:30 and then Jared Tendler at 2:30. Tomorrow morning, however, we will have Make Hogue Money right after the market prep. It's so happy and comfortable and pleased to be back with everybody here this morning. Get out there and profit, trade well. Take your deep breath. Stay humble, grateful, creative, and centered in your trading. I'll tell you some Vegas stories another time. And trade well, man. Get out there and profit. Again, such a pleasure to be back with everybody today. I know I missed all of you. Let's get out there and have a great trading day. See you for, at very least, the reflection at the end of the day. Have a great day.